From DailyForex, this is Chris taking a look at the DAX. The German DAX initially pulled back just a bit during the trading session on Friday, but then turned around to show signs of life again. It looks to me as if the market is trying to do everything it can to challenge the 17,000 euro level. And I think at this point, we will continue to respect it, at least in the short term. However, over the longer term, if we do break above there, then it opens up another 500 euros higher. It is very possible that short-term pullbacks present themselves as buying opportunities, and that's exactly how I would look at this market. We have seen a bit of a bullish flag somewhat kick off, and I do think that the buyers continue to flock towards the DAX, understanding that with Germany entering a recession, it's very likely that the ECB will begin to loosen monetary policy in the next several months. As a general rule, traders are trying to do everything they can to front run what the central banks are doing. And I think this is a scenario where you just look at this through the prism of volatility and, of course, liquidity. If liquidity is going to continue to be pumped into the system, stocks typically go higher. The 50-day EMA is approaching the 16,500 euros level, so therefore I think it's a bit of a floor in the market. In general, this is a market that I think will be choppy and noisy, but you cannot sell this market. It's very difficult to imagine a scenario where you would get short. We would have to see some type of meltdown, and although not impossible, it seems very unlikely in this current trading environment. It's a completely risk-on environment as traders out there continue to bank on central bankers out there willing to help them out.